would like to welcome you to the Q2FY21 earnings call of Container Corporation of India. We have the management today being represented by Mr. V. Kalyana Rama, Chairman and Managing Director. I'd like to hand over the call to Mr. Rama for his initial comments, post which we'll open up the floor for Q&A. Over to you, sir.
Thank you, Bhonika. So this quarter, we have encouraging operational performance. This, in fact, aided by a major extent by our performance in September. I would be very glad to share with all of you. In September, we did better than last year. That's a very encouraging thing. The demand has picked up. Domestic demand was continuously there. Of course, during the lockdown, that was a problem about the movement, but after that, the demand really picked up. We are doing well in the domestic sector, and from September onwards, even the EXIM sector, the demand started picking up. Particularly, the exports are very encouraging from India. Imports are also picking up, but not to the same level as of the last year. So, with that, there is some shortage of boxes for export in India. Looking at this and to elevate this problem and also taking that as a business opportunity, we started providing boxes for export to Iran. This is a new stream we started. During the quarter, we supplied around 19 boxes as a trial shipment, and it is picking up. We are also looking at starting some more short services on overseas, such as Middle East and Iraq. So, these are the new business opportunities which we are getting in this tough situations. And all of you know that Bangladesh, we started running trains, and that is quite encouraging. Demand is picking up. Certain initial teething problems we are sorting out there. Our CapEx program is intact going on, except that due to some restrictions on imports from China, we stopped importing our containers, which we were otherwise doing. We got around 8,500 out of the 12,000 order. Rest we cancelled. We short closed our contract. But we are inducting our rakes. These new rakes are higher capacity rakes, which are DFCCI compliant. So once DFCCI becomes operational, we will be able to run them with higher payloads. There is a payload of 25 tons on these wagons. 3 of such rakes are already inducted, and we may be inducting around 10-12 rakes in this year. So as far as management is concerned, we are optimistic that the things will look up in the rest of the year, and we will be able to cover a lot of ground, which otherwise we were thinking that we may be slipping out, but now things are looking bright. So a revised forecast, what we forecasted in the beginning of the year, that we may be around 20% less than what we did last year. But now we are feeling that we may cover some ground and may come up to 10% less than last year, or even better those figures, maybe better than 10%, even closer to last year figures. We may be able to perform. And the future outlook is definitely good for logistics. There is no change in the long-term growth story. It's intact. And all the other new businesses what we started, we are going as per our plans. Of course, little bit of slowdown happened in the COVID pandemic times, but now we again put them back onto the tracks. We are working on them one by one. And regarding the land license fee, so I think there is a lot of concern before a number of questions only on land license fee being asked. To save time, let me share with you. Please listen to me carefully about this. Now today we are operating 28 terminals on railway land. So the railway land which is being used by Concor, we have to pay the lead charges, which we call them land license fee. As per the rules applicable, as per the circulars of Indian Railways which are in vogue today, according to which the calculation is to be done. So the management is very confident and we did the calculations. The total liability on that account will be to the approximation of 450 crores for the whole year. And we are recognizing the liability in our P&L statements and balance sheet at that rate only. That is in Q1 as well as Q2. Of course, we do intimate that there was a demand notice which received by us to the tune of 1,280 crores from Indian Railways for 13 terminals. This is a good corporate governance practice which your company always follows. So this is a demand notice issued by Railways. It is not recognized by us, and then we are very sure, management is very sure that the calculation which we have adopted and where we are recognizing we will be able to finalize that with Indian Railways, because ultimately the final authority is Indian Railways in this. But no authority can take beyond decision which is as per the rules. So this much I can share with you now. So the 1280 crores figure is a good corporate governance practice intimation only. Our recognition of this on this head is 450 crores. All of you may please note this, and I request people not to ask more further questions on this. So I have very clearly clarified this issue, and again I repeat, we are very confident that the total liability on this count will be 450 crores for the entire year, and we are very sure that we will be able to finalize this with Ministry of Railways without any doubt. Thank you, Bhumika.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Atul Tiwari from Citigroup. Please go ahead.
Yes, sir. Thanks a lot. And sir, congratulations on very strong performance in the September month and increasing the guidance for the year. That's very encouraging in a tough environment. And sir, again, though you gave clarity on LLF, I won't ask any question on LLF issue per se, but just any comment on we read in the newspapers that government is now looking to reset the basis for calculation of LLF from 6% of land value to anywhere between 2% to 5%. So would you be able to throw any light on that? Is it true, not true, or is it very speculative?
Well, no comment. See, these are all, media reports. So that's why I took time to explain to all of you that as per the present circulars in vogue, what will the liability. So there will be a lot of reports in media, they keep coming, so we can't discuss them, officially.
Okay, sir. Thank you. Thanks a lot, sir.
Thank you. The next question is from the line of Lavina Quadras from Jefferies. Please go ahead.
Yeah, hi sir. Congrats on the good set of numbers. 2 questions from my end. One is, any one-offs in your other expenses, which maybe you had some write back or something on that nature, which has helped results? And secondly, sir, I don't want to ask at all about the absolute LLF, but in terms of timeline, do you think that whatever the number is, it gets resolved by this year end? So in terms of timeline, thanks.
The timeline is very clear. By the end of the year, this will get resolved, because that we have to close our balance sheet at the end of the year. I can't keep on, contingent liabilities, unrecognized liabilities on my balance sheet. So it will definitely be resolved by the end of this financial year. And I think I made very amply clear in my initial remarks.
And
one-off thing, our DF will answer your question. Is there anything, Manoj, one-off?
No, nothing is there except the enhancement by nearly 70 crores in LLF because in last year there is no other item which is significant enough.
So there is no one-off in this quarter, and the LLF is the same rate what has been taken in Q1. This is in Q2. So this is what is for this financial year.
okay, sir. Thank you.
Thank you. The next question is from the line of Amish Shah from Bank of America. Please go ahead.
Hi, sir. So the realization per TU this quarter has been weak YOY. So is that on the back of a lead distance issue or something else at play?
I could not get you. What is you are asking realization?
So the realization per TU this quarter was slightly weaker on a YOY basis. So was it on the account of the mix and the lead distance, or was it on account of something else?
No, it is because the more of empty boxes we are transporting in EXIM sector. The imports are less, and we are transporting more empty boxes into interland. On empties, we normally charge less. We don't take full margins on empties. So that has actually reduced our realization little bit.
Okay, so it was a mix issue, sir. So generally you give these numbers of what was the empties and double stacking, etc. Can you give those this time too?
Yes. You see, and then the realization is less because the LLF is around 70 crores more in this quarter compared to the corresponding period of the last year because of increasing LLF. So last year the LLF was charged on the base of TEU, and now it is a fixed percentage of the value of the land. And regarding the lead and the double stack, our director, Mr. Sanjay, will share you the numbers.
Double stacks, in fact, we have increased as compared to Q1. This quarter we have done 673 double stacks, whereas last year in the same quarter we had done 674, only one train more. But as far as lead is concerned, our lead has dropped quite a bit from 786 kilometers. It has gone down to 752 kilometers in this financial year for the first half.
Got it, sir. And the lead distance is predominantly on account of interport movement from JNPT to Mundra, or what explains the lead distance cut, sir?
We transported because of the problems on the road network. We did do a lot of short distance movement, very short distance, like extension gates we ran, and we did around 22,000 TEUs in that at Chennai and Mumbai. The distances are something like 20 kilometers, so that actually brought down the lead distance.
Okay, so now as the road is back, so should the lead distances improve?
I think 2 questions per participant. I'm sorry, but I will answer this. The road is not the issue here. Road, there is a problem, but now the extension gates we are not running. Thank you.
All right, thank you.
Thank you. A reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, request you to rejoin the queue, please. The next question is from the line of Rushabh Sharedalal from Pravan Ratiral Shares and Stock Brokers. Please go ahead.
Yeah, thanks for the opportunity and good congratulations on a good set of numbers. Just had one question. I understand that the disinvestment part pertains to DIPAM, but all I want to know is that let's say if tomorrow DIPAM comes up, then is anything pending from Concor end to conclude the disinvestment part on the part of the company? All that I want to ask. Thank you.
Very hypothetical question, this one. I have no comments on this.
Sorry, sir?
I have no comments on this. This question I think it's very hypothetical.
I mean, all I want to know is whether
Sorry, partner, sorry, we can't answer these questions. These are beyond the conference calls. Okay.
Okay, sir. Thank you.
Thank you. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi sir. Congrats for a decent performance. Can you share the originating volumes for this quarter as well as the empty running losses which we used to report?
Originating volume for this quarter are in Exim it is 472,428 TUs, domestic 68195, total 540,623 TUs.
Okay. And sir, empty running losses?
Empty running Exim it is 42.99 crores, domestic 46.37 crores, total is 89.37 crores.
Sure. And just a follow-up on this,
Half year. It is for half year. Empty running is for half year.
Which is where I was wondering. Fair enough. So, the reason I was just referring to that was you did mention a mismatch in export, the availability of containers, and hence probably, some uptick in the empty running movement. Has this problem solved now?
Empty running has come down because we are building some circuits and we did more double stack running. So the empty running has come down compared to the corresponding H1 of the last year. Overall.
Okay, fair enough. Thank you, sir.
Okay.
Thank you. The next question is from the line of Siddharth Gupta from AS Stock Broking. Please go ahead.
Hey. So congratulations on posting such excellent results. But sir, one immediate react in today's interview on CNBC, the Secretary of Economic Affairs spoke about the disinvestment being completed by this year. Do you think that the resolution of the land lease policy would be done before the land lease policy is fixed? And if at all, if the land lease policy amounts to a charge of 900 crores, would the balance sheet be in the next quarter we make contingent provisions for the same?
See, I think I talked about it length in the remarks, opening remarks. So here two things. The circulars applicable to Concord will be the total land licensing fee liability is 450 crores. There will be no change in that. Now, regarding divestment, whatever statements Secretary Economic Affairs is making, that in his capacity as Secretary of Economic Affairs he is talking, so let's take it as the authority talking on that. That will not affect the liability of your company before divestment. If it gets divested, the scenario changes. So that will come to know once the divestment, if the EOI is released by DIPAM, then these things will become clearer in the EOI. So it will be known to everyone. So once the divestment process starts, these things will get clarified. Government, as the largest shareholder of the company, which is trying to sell that share, they will come out with the terms and conditions, at what terms and conditions they are selling this company.
Right, sir. But is the management planning on making contingent provisions in the next quarter to account for the worst case scenario of the LLF rates not falling?
I don't know why you are asking this question after I again clarified now to you that as for the liability will be this. So I think I made it very clear, isn't it?
So, thank you, sir. Thank you for your opinion.
Yes.
Thank you. The next question is from the line of Deepika Mundra from JP Morgan. Please go ahead.
Yes, sir. Thank you so much for the opportunity. So firstly, just wanted to get a sense of the real coefficient at various spots, and as road normalizes, do you expect to sustain the market share gains that rail has made versus road? And the second question on the lease liability, just wanted to know what is the current tenure of the lease liability and does it get extended? Thank you.
Lease tenure of the lands.
Yes.
Yeah, lease tenure of the lands, you see, it varies from terminal to terminal because these terminals on the railway land develop over the period and they get extended as and when the lease is getting expired. So that is, many of the places we got sufficient time with us as the lease period. So there is no problem on that count. And we have no worry, and I also can assure all the investors there need not be any worry on these lease tenures. Regarding the railway share in the ports, there are very good measures taken by railways in consultation with us. That is introduction of timetable trains and also giving a lot of importance to the freight traffic on Indian railway system. And so the endeavor is to see that whatever the percentage gains we got during this time on the rail mode, to maintain that and sustain that increase and see that this traffic continues with the railways.
Got it, sir. So just to recalculate, so the 450 crores will be applicable for quite some time given that you have significant lease tenure left on the lease.
The lease tenure is not an issue at all. The lease liability, which we call land license fee, is 450 crores for the whole year.
Okay, sir. So I just want to clarify that 450 crores persists till the tenure of the lease liability extends, and with the escalation clause, of course.
There will be, this year 450 crores. Next year we will tell you at the beginning of the year what will be the lease liability. Okay, Deepika?
Okay, sir. Thank you.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the opportunity. Sir, can you help us with the rail freight margin for the quarter, current quarter as well as the last year same quarter?
Yeah, rail freight margin for this current quarter is 29.9%, and last year same period it was 28.86%. So there is an improvement of 1% in rail freight margin.
Right. And what is the expectation? Because I remember a couple of quarters ago you had talked about 30 to 33% kind of rail freight margin. So what is the output we should work with, like with respect to rail freight?
Repeat your question and talk slowly. We are not able to hear you properly.
Okay. What would be the rail freight margin, for the full year or for next year? Broad indication, sir.
We will be maintaining the rail freight margins. See, whatever we gave last year, we will be definitely maintain that or improve on that. As I mentioned, I think now 2-3 times in this conversations that this is because of circuit building and also the better utilization of assets by double stacking and trying to get more in the empty movement directions.
Understood. And with respect to the lease terminal, we have in the past indicated that whatever we wanted to surrender, we have already surrendered. So, is there a possibility that we can, if required, we can move the cargo to other terminals from these lease terminals? Is there a possibility for any of these terminals?
See, that is business re-engineering is a continuous process. It is not that today I decide I will do this. So as the trends are emerging and as the business is emerging, so we will be working on these things. So when we worked out that our 18 terminals we can surrender and we can take all that business to other terminals. As of now, 28 terminals we are operating. And as and when the opportunity comes, we will move the business to our own terminals and try to surrender to reduce the cost. That endeavor will always be there. But as of now, this 28 we are operating. Okay?
Sure. Got it. And just a clarification, sir. Are other operators allowed to access our terminals, the lease terminals, or they are not allowed to access them?
Everybody can access my terminals at a cost. It is a commercial proposition. Now this access we have given to all the people who wants to access our terminals, but this access will be at a cost to them at an opportune income to us, we will charge for accessing our terminals. That will be negotiable with the particular operators, or it is one and same for everyone who have access, but those things we will be notifying time to time. What will be the charges? It's no free access, there is no free lunches to anyone.
And there is no change in the policy with respect to that?
Yeah, what policy you are asking for? This is a commercial organization, man. Commercial rates will be there.
Understood. That's really helpful. Thank you.
Thank you. The next question is from the line of James Jen from Principal Asset Management. Please go ahead.
Hi, thanks. I have two questions. First was on the DFC timeline. What are the key milestones that you are looking at in terms of the timeline? And the second question will be on the engagement with port operators. Have we engaged the port operators with regards to the DFC? Is there a lot of indication that more volumes are coming our way? That's all.
Which operators you are asking? Engagement with?
Some of the port operators. Have we engaged with some of the port operators to discuss about the volumes that will come once the DFC is ready?
With other operators, other railway operators?
No, sir, I think he means port operators.
The port.
Pardon? What he is asking?
The port.
I'm not able to listen to him properly. Regarding DFC timelines, I can tell you, the expectation is by the end of this financial year, the DFC, Western DFC will be operational between Rewari, Palanpur. So the interesting section for us will be from Katwas, where we got our terminal. We will be operating on DFC from Katwas to Mundra and Pipavav ports. The second question, I could not understand what you are asking.
Yeah, so the second question is really, have we had discussions with the port operators with regards to the demand that they will provide us once the DFC is ready?
No, see, we got sufficient volumes with us to run trains on DFC. So we don't require somebody else to come and give us volumes to make trains run on DFC. That is the doubt, because I am not able to still listen to you, that there is absolutely, we got our own volumes. And you see, even today we run something like 10, 12 double stack trains. That will, if DFC, if they increase the length of the train as originally planned, which is not very clear as on date, these 12 will become 6 trains. So still we got volumes to do 6 trains in the current scenario, and we are working on some business re-engineering that we may increase in longer trains, which are 1.5 kilometers in length. We may be able to run 8, 9 trains on our own. So we don't require any consolidations to run trains on DFC.
Okay, thank you.
Thank you. The next question is from the line of Srinidhi Karlekar from HSBC. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. Sir, I just want some clarification. If I refer annual report, sir, the land license fees that we paid in the that is FY20 annual year is 40 crore, which is kind of lesser than we talk about, which is in the range of 140 to 150 crore. I just wanted to know why it was so low in last financial year.
That is because of some, one-off adjustments we made because of some receivables were there for us from railways.
Okay. And did it happen, sir, in last quarter of FY20? Like we were providing at the rate of something like 30-40 per quarter, and in the last quarter we kind of adjusted that. Is that the right understanding?
Yeah. For the FY19-20 you are asking?
Yes, sir. FY19-20.
Conference of 2021, you are asking FY19-20 questions now to me.
Yes. I just wanted to know from a accounts perspective why it was first low, because we were guiding.
One of edges.
Okay, fair enough. And the second question I want to ask you that I think we had taken some price hike and it was deferred till October. So I just wanted to know, has that been instituted and communicated to our client? Like, has that been notified now? Price
hike, we we deferred the price hike because looking at the situation and in the Indian market, and of course the exporters, importers are at a lot of pain. So we decided to extend the thing for further some more time. So we are not increasing our charges. We got sufficient margins that you have seen from the quarter results. We in fact increased our rail freight margins, we increased our operating margins in this quarter. So we are very comfortable with our margins. We don't want to further charge that. As of now, the price hike has been further deferred.
Okay, sir. And the last one, if I may. So we talked about diversifying business, like generating a lot of business from bulk cargo movement. I know you touched upon that it has been a bit impacted because of COVID, but just wanted to know what are our plans in that part of the business?
They are pretty much intact. We are working on that. So, as I said, there is little slowdown because of COVID. Otherwise, all our plans are intact and we are working continuously on them.
Okay, sir. Thanks for answering my question and all the very best.
Thank you. The next question is from the line of Pratik Kumar from Antique Stock Broking. Please go ahead.
Hello. Yeah, good morning, sir. My first question is, you highlight this data on market share at different ports at rail coefficient. Can you just give that data, please?
GNPT 37.3%, Mundra Port 30.6%, Pipavav 10.7%.
So what is the Mundra number you said?
30.6.
This is port-wise Concor volumes you are suggesting, right?
Yes.
Yeah.
And Vizag 6.5%, Chennai 7%. These are the major contributors to our volumes.
And sir, Concord share at these JNPT, Mundra, Pipavav, the share which you give data?
Yeah, JNPT actually, out of the total rail volume, our share is 66%. Mundra Port it is 42%, and Pipavav it is 45%.
Okay, and sir, rail coefficient data also you give?
This is for the first half of this financial year, I am telling you.
Right.
Rail coefficient JNPT 23%, Mundra Port 25.4%, and Pipavav 61.5%.
Pipavav is how much?
61.5%.
Okay, so there's a sharp drop in Pipavav, it seems.
Yes.
Yeah.
10%.
Sure. And just sir, on lead distance you mentioned on as a company as a whole, can you give this EXIM and separately EXIM and domestic?
What is one?
You mentioned the lead distance for the whole company. Can you give it segment-wise EXIM and domestic for this quarter?
Yeah, lead distance for I have for the half year.
Right.
For half year, the EXIM lead distance is 681 kilometers. Domestic it is 1328 kilometers. Total 752 kilometers. What is that?
Thanks, sir. I'll get back to the queue.
Okay.
Thank you. The next question is from the line of Bhavin Gandhi from BNK Securities. Please go ahead.
On we being a PSU, that's all that I wanted to check.
Mr. Gandhi, can you repeat your question, please?
So I just wanted to check if the 450 crore calculation of ours is contingent on we being a PSU.
It's yes. One way it is yes. It is not a question of PSU. It is with the same owner. So that implies.
Okay.
So and if the ownership changes, they can put the new conditions.
Sure, got it, sir. And second is, sir, the tonnage data in million tons for EXIM and domestic, if you can provide.
Million tons for first half of this financial year.
Yeah, that would be okay, sir.
Yeah, it is EXIM. It is 14.7 million tons. Domestic it is 3.63. Total 18.33 million tons.
Sure, got it. Thank you.
Thank you. The next question is from the line of Atul Tiwari from Citigroup. Please go ahead.
Yes, sir. Thanks a lot.
So sir, this 450 crore being contingent on Concor being a PSU, so does that mean that this demand by Indian Railways is calculating it as per the private parties, and you guys are calculating it because you are a PSU? Is that right understanding?
See, it's not question of PSU or private or anything. It is based on the rules applicable on the land license as per the circulars now in vogue. So that, you see, the calculation we are getting demand notices because people are not able to calculate properly. That we are now trying to clarify and settle these things with the Ministry of Railways. So we work at the board level. So the demand for us comes from the divisional level. So the difference happens. So it's a complex now. I have to explain the entire railway working. So take it as it is that we are now working at the ministry level. The demands at the field is at the divisions. There are 74 divisions on Indian Railways today. So wherever we are having our depots, those divisions will raise these demands. So there is this confusion is going on that we will sort out. But otherwise, the liability will be 450.
Okay. So, sir, just to clarify, because this is kind of a crucial issue for the stock price. So, this difference of opinion between Concor and Railway is not dependent on treatment of land leased to a private party versus treatment of land leased to a PSU. It is not that different.
See, first of all, there is no difference of opinions here. It is a question of interpretation by people working in the offices. So these are all, there will be so many babus sitting there, somebody will work out and send a notice. So let's leave that at that. The land, yes. The second thing is, there is no difference, the land leased as a PSU or somebody else. But the government policy as on date is land is only leased to the railway, land is leased to only PSUs. It's not leased to private people.
Okay, so is there there is no separate set of rates for the private party as of today?
Atul, I think I told you, how many times I have to tell the same thing?
Okay.
What you are trying to ask me? I said, there is no policy today by the government, railways, to lease land to private people.
Okay.
That is, I'm answering your question, isn't it?
Okay, sir. Okay, got it. Thank you, sir.
Thank you. The next question is from the line of Krupa Shankar from Spark Capital. Please go ahead.
Thank you for the opportunity, sir. My first question was on the competitive intensity. Can you throw some light on how things have been progressing, at least on the long haul, wherein you had earlier indicated that the discount levels were quite high? Can you throw some light on that, sir?
Long hauls of what long hauls you are mentioning?
No, sir. Discounting on the long hauls. There was massive discounts which were being provided.
No, I do not know what long haul, discount on long haul. There is no concept of long haul in container trains.
No, sir. Discounts on freight rates. Just discounting on the freight rates part.
You see, container trains, there is no discount on container movement. Container movement is based on the haulage charges announced by railways. So there was some discount given at the beginning of this year, 25% on the empty movement and 5% on the loaded movement. That is a discount across the board for all the container movements. That is what you are talking about?
No, sir. On the long lead distance, so there was indication that there was been the discounting provided. There has been a massive increase in the competition. And also on the short lead also there was,
My request to you is don't go by these media reports and frame your questions. There is no discount on the container movement. Container movement, as I said, only 5% on loaded traffic, 25% on empty traffic. Across the board, there is a discount given by the Indian Railways.
My second question is on the LLF assessment which was provided by Indian Railways in June. So just wanted to understand.
I don't want to answer any further questions on LLF.
No, sir. I'm just There's no question on any projection, anything, sir. I just wanted to check that have you surrendered Okla and Patna terminal after that circular was provided? Just wanted to know that, sir.
Yes, obviously. After the circular came, the new resign started from 1st of April, and we surrendered in May. These terminals, 18 terminals, we started surrendering from May onwards. So after that circular came.
Okay. So Okla is surrendered. That's what I understand.
And then Okla is?
DCP Okla has been surrendered?
Okla is surrendered. We already mentioned that to the information to the stock exchange. Surrender.
Thank you.
Thank you. The next question is from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
Yes, sir. So my questions are not on LLS. So my first question is on rail freight margin. We've seen about 100 basis points Q on Q jump. Could you highlight what exactly is driving this margin improvement, and how should we look at this margin going forward, given that clearly the outlook is looking a lot better for rail freight in general?
See, why the rail freight margin improves, I think this we discussed many times. Again, I will repeat that. It is because we build circuits, we run double stacks, and we try to optimize on and cut down on our empty running. So our empty running cost has come down again this quarter. So this, now if you ask me how far we can go, there will be, there will be some limit to it. But we keep on working on how best we can do this. So the rail freight margins, I remember this from the time I came on this board, and now for 4 years I am working as CMD. So it started, we used to be around 21.5%, now we came up to 29.5%. Now whether we can further like this growth trend will go, that I can't tell you. But definitely we will be working on. So if DFC comes, we can run more double stack, we run longer trains, maybe the rail freight margins may further increase. And if we can find the logistics, always the problem is the return loads. Whether it is road, whether it is rail, so there will be more demand for one side, there will be less demand for the other side. So for example, north to south, there will be more demand on loaded traffic, south to north, there is less demand of loaded traffic. We have to reposition containers. So we started coastal and we tried to do some adjustments in that. And so we keep on working on all these things. So if we can find some traffic where we can build another triangular circuit or a quadrilateral circuit and cut down on empty running, further increase for the margin, rail freight margin, there is always a scope. What is the number and what can be the trend, I can't assure you. I can't give you any guess figures on that.
Sure, sir. But from our perspective, at these levels is something we should assume can sustain, right?
Yeah, I am doing conference to give you the outlook of the company. What will be the stock price, I am not concerned. Because,
No, sir, I'm asking about margin, sir. I'm not talking about stock price. That is for the market to determine. Anyway, so my second question, if you can help me understand the growth prospects. Obviously, there has been some market share gain for rail versus road during the pandemic. But some of it might also be, structural and which could continue. So some anecdotes or maybe some qualitative about what kind of cargo might stick, and then what is the medium term growth? I'm again not talking about the next 6 months, but say next 2 to 3 years, what is the kind of growth for the rail container industry overall that we can envisage?
Yeah, good question. See, I'll see. Now you are talking very sensibly. See, when we look at medium term, see, I shared this earlier also. We are working on moving the goods in bulk. It's a sector, it's a type of movement which had to pick up in India. And for bulk movement, we are not bringing any specialized equipment. We are trying to move in the same containers by using flexi bags. So that is giving a lot of flexibility in our operations. It will bring in a lot of flexibility. And if you ask me whether we did this movement, yes, we did this movement. We did this movement in food grains for ITC. We almost did around 2,000 containers. We did 2,000? 2,000 containers we already did last year. So we are very confident that this movement can happen. This can happen in food grains, happen in cement, can happen in industrial salts. We are working with the oils also. So there is a huge potential for this. So that increases the cargo availability for domestic movement. So this is one very important factor which can improve, which can increase our share, which can increase the cargo movement by containers, as well as for Concur also the market share. The second thing is the rail share, whatever is increased. I answered in the earlier questions that railways also are in association with Concur. We are working on trying to maintain this increase with railways, even after the things get normalized. So there are timetabling of trains. We started running around 10 to 11 pairs of timetable trains, which is we did 2 years back. It was very well welcomed by the customers. So now again when we started, our customers are very happy. So the running times, we are working with railways trying to cut down to giving more of certainty into the operations. So that will further increase with the DFC coming up, because dedicated freight corridor is only for freight operations. There will be a lot of certainty, so we can give assured services, time assured services. So these things will increase the market share of the rail mode as it is, so that will help Concur to gain more. And we are now further giving emphasis on providing end-to-end service. So this, even though we were offering for quite some time, but we were not very strong, and we do not have the strengths to provide the last mile logistics. Now we started doing that. From last quarter, we are giving a lot of emphasis. So that gives a complete solution to our customers. So that will be another initiative which will help. In distribution logistics, there is a break, but we are going ahead with that after this COVID effect now come down. We are now again started moving on that front. There is a lot of opportunity in that. And as I mentioned, there is a point-to-point export, which we are, one, to help our exporters, Indian exporters. Second, as a business opportunity, we started providing boxes to Iran. We are looking at providing boxes to Middle East, that is Dubai and Iraq. We are already giving our boxes to Bangladesh for exports, Nepal. Even we don't mind giving it to the the neighboring countries if required, nearby countries. So this is another new stream which we are working. So all these things are positive factors. That's why we are going ahead with our capital expansion program without any pruning down it. We are going ahead with our plans. I think I answered your question.
Yes, sir. Very helpful. Thank you.
Thank you. The next question is from the line of Vipul Shah from Sumangal Investments. Please go ahead.
Hi, sir. Can you comment on the competitive intensity vis-a-vis private train operators?
No comments.
Sorry, sir?
No comments.
Okay. Thank you.
Thank you. The next question is from the line of Gautam D from Incarnation Investments. Please go ahead.
Sir, I had a question on...
sir, can you speak closer to the answer, please?
Yeah, sir, I had a question on the dedicated timetable, the fixed timetable that will come in with the DFC. So, what impact does it have? Does it commoditize container rail operations in the sense that, just like a metro, I can choose, if I miss this one, I can take the next one? So like that, does it commoditize rail operations between two players? And what impact does it have on the storage demand for ICD and the CFSs? Because there will be more trains traveling. I'm not talking about the short term, but over a 3 or 5 year period. And also, does it take away power from the freight forwarders? Because some of the shippers can directly access the trains.
Okay. Your questions are a little confused. I'm sorry to say this, but I'll tell you, the freight forwarder role is totally different from train running. So freight forwarder will continue to be there, because freight forwarder role is to bring the freight and, assist the exporters or the importers in movement of their cargo. So they will be continuous. They will not go out of business. Now storage of ICDs, the storage are two types. One is storage of cargo in warehouses and then stuffing into containers. Now container storage is the second one. And if you remember, Concur for last almost 3 years, we are giving 45 days free storage for containers. So we actually facilitated our customers and we said we don't want any storage charge and storage of containers. That is, in our view, it is not an income stream to look at. So we made our customers very comfortable that they can bring their cargo. But cargo storage we charge, not for container storage. So that will answer your second question, that the ICD storage will not be affected as far as Concur is concerned. The other thing, that the running of trains, yes, it is more like, there will be a fixed timetable, there will be time assured services. So the exporters or importers can work on their cargo profiles and they can plan for their exports, they can plan for their imports with quite a bit of certainty. They need not go on doing an exigency planning for exports and imports.
Okay, that is helpful. So in such a scenario, the player with the highest number of trains and the ability to keep on buying trains would be better placed? Or is it about getting the best time slots in line with when the ships are coming at the ports?
But obviously, yes, definitely Concur will get benefited more with that because we got our volume, we got our strength.
Okay. And third, more basic question was, like 25% of the shipping freight into the US is e-commerce right now from China to US. And that is why Amazon has gotten into buying ships. So do you see a place for container Concur in the domestic e-commerce shipping, though it is a bit slower, but some seller in North can sell in Mumbai because you can help that.
Yeah, we are in hinterland logistics, and in the e-commerce where we will get associated with in our distribution logistics business. We are starting the distribution logistics centers. So that will, it can serve even e-commerce players, it can serve agri-product players, it can serve industrial product players. So we are entering into that market. And as far as transportation is concerned, it can be once the timetable, time assured services come, even e-commerce containers can move on right.
Sure, that's helpful. Thank you.
Thank you. The next question is from the line of Kondinya Nimagada from JM Financial. Please go ahead.
Hi, sir. Thanks for the opportunity. So my first question is with respect to CapEx. Even you did speak about cutting some portion of CapEx due to the Chinese restriction. So just wanted to understand what the new number would look like.
We are planning for a spend of around 500 crores this year.
Understood. Sir, my second question is, we have got this 5% haulage charge benefit from Indian Railways. So did we pass on the benefit to customers or have we booked the margins on that?
We have not passed it as a straight reduction in our freight charges, but we come out with some good schemes, discount schemes, which is helping our customers who are loyal customers more. So we are getting good volumes because of that.
Understood. Sir, one last question, if I may. Sir, we did speak about the shortage of containers and all. So just wanted to understand how does it impact operationally and also financially the P&L and balance sheet.
No, it will not impact us. See, when there are no containers, we are finding an opportunity. So we are also supporting exporters and finding an opportunity in putting our own boxes and trying to get into an NVOCC market, sending our boxes to Iran, Dubai, Iraq, and Bangladesh. In here we are sending our boxes. So there is a new business opportunity we could explore in that.
Because you did speak about falling little drop in realizations, that's why the question has come from.
Pardon?
You did speak about, its marginal reduction in exim realizations due to higher MT. So,
yeah, MT repositioning is coming. So that is, the margins are dropping. See, instead of imports, more of MTs are moving from port into hinterland. Earlier there used to be, India is normally an import excess country. Now we have become export excess country. So we are getting less imports, so we are getting more of repositioning boxes.
So do you see this trend sustaining, sir?
No, this is a temporary phenomenon. I think we will, we are short of time. We will go for any other questions pending from anybody?
Sure, sir. The next question is from the line of Lavina Quadras from Jefferies. Please go ahead.
So last one from my end. On price hikes, there was supposed to be one taken in October that was being discussed, 3 to 5%. So I just wanted to know if there's any update on that.
So I already answered this. I think you are not listening.
Sir, no. I got logged off from it. And on the future outlook of that, if there is any other plan 6 months later.
As of now, there is no guesswork on this. As of now, we deferred it.
Okay, sir. Thank you.
Thank you.
We'll take the last 2 questions.
Sure, sir. We take the last question from the line of Deepika Mundra from JP Morgan. Please go ahead.
Thank you once again, sir. Just on the rail coefficient, again, you mentioned Mundra port was 25%. So there is definitely an increase in JNPT, but not at Mundra. Any particular reason for that?
Rail coefficient?
Yeah.
The reason is that in Mundra port, the overall volumes have seen a growth due to the major reason is transshipment volume. Because it seems there was some trouble in Sri Lanka. Lot of volume got diverted to Mundra port for transshipment purpose. So that is why if we remove transshipment, then rail coefficient will see an increase as compared to last year.
Okay, got it, sir. And sir, I missed your guidance, static guidance for the year. If you could just repeat that.
We may come to, earlier we said 20% less than last year. Now we are giving a fresh guidance of 10% less than last year or even better.
Got it, sir. Thank you so much.
Thank you. I now hand the conference over to Ms. Bhumika Nair for closing comments.
Yes, sir. Just want to thank you for taking time out and answering all the queries very patiently, and all the participants for being on the call. Wish you the very best, sir.
Thank you. Thank you, Bhumika.